Right now, you are looking at the entire market cycle that we are in from start to where we are right now. And there's a lot of speculation about how long this bull market is going to last. And a lot of people that actually think we're kind of coming toward the end of the bull market cycle. I am here to tell you today that I conclusively do not think that that is what we're going to see this year. I do not think Bitcoin is going to top this year. I think we've got a long time of continuing to trend up. And I've been doing this for 8 years. I've managed to collect a couple nice toys to show for it. So I feel like a lot of what I'm talking about here is rooted in facts. I want you to be the judge of that. Let me know in the comment section below. And before we get started, tell me, where do you think we're ending this bull market cycle? Do you think it's going to be this year, next year, the year after? Let me know what you're thinking in the comment section before you hear what I have to say. And really, what this boils down to, we're going to do this very methodically, is we're going to be looking at the different kind of phases that exist throughout these market cycles, and not only with Bitcoin, but also with the S&P 500, which I actually think is much more important than Bitcoin in this situation as well. Now, as far as where I think this could take Bitcoin, we are potentially looking at targets well above $200,000, well above $300,000 even as well. There's a lot that's going to go into this, and if you're new to the channel, then one of the things you probably don't know yet is that we carry out extremely grounded, realistic analysis on this channel and nothing else. Sometimes it's offensive. If it is offensive, I encourage you to take it as offensively as possible, shove it up your ass and get the fuck off my channel. But if you can take the heat, and if you like the idea of genuinely making a lot of money in this market without relying on hope, that's what we aim to achieve on this YouTube channel. So let's get straight into it. And really, the first thing I want to do is I want to explain to you guys why I think the S&P 500 is so relevant for Bitcoin in its journey right now. I really think this is a critical starting piece for this video because essentially pretty much since 2021, but even earlier, the Bitcoin market has been largely extremely dependent on the health of the S&P 500. There are exceptions. You are not smart for pointing them out, but this is a general kind of rule that we've seen respected quite well, whether it's Bitcoin topping out right around the same time as the S&P 500 or the S&P 500 topping out a couple months before Bitcoin only purely because of the FTX debacle that ended up happening at the end of 2022. Otherwise, Bitcoin probably would have bottomed out at the same time as well. Whether it's the S&P 500 and Bitcoin punching in a high roughly at the same time and then punching in the next highs roughly at the same time. Whether it's this drop right here, ladies and gents, where they're dropping at roughly the same time. We can see so much proof that the S&P 500 and the Bitcoin price tend to move together. And this is not surprising. We know why this happens. The reason this happens is when all of those bigger institutional players entered the space starting in 2017 or even earlier, they ended up dominating the market, and those people are moving the same money in and out of the S&P 500, in and out of speculative tech stocks, and of course, Bitcoin. It all gets lumped together in the same category. There's a lot of data to prove this. I don't want to spend too much more time talking about that today because we've covered this extensively for those of you that are subscribed to the YouTube channel. And quite frankly, you can just go back and check this all out yourself. It's very, very clear to see the correlation. And so with all of that in mind, I think, what I want to do is I want to analyze the S&P 500. The reason I want to analyze the S&P 500 before I even get to Bitcoin is because it's much bigger. Bitcoin doesn't really move without the blessing of the S&P 500. And the S&P 500, as a result of being big, it has a lot less manipulation than Bitcoin does, and that makes it a much cleaner chart to read. And one of the things that we got earlier this year is a beautiful back test of its previous all-time high. Now, this all-time high was set at the very beginning of 2022, at the very end of 2021. So we're literally going back over 3 years, about 3.5 years now, where this all-time high was set. And we ended up coming right back to this same price level during the tariff drama from Trump. Now, obviously, a lot of people read that tariff situation completely wrong. It's probably because they weren't watching this YouTube channel. We were watching it very closely. And of course, the whole way down, I was telling you guys that this is the key bounce level that the S&P is probably going to find And it's probably just a case of Trump scaring the shit out of the world until something starts getting really bad, and then he's just going to reverse course. And we've seen that happen multiple times throughout this year. Again, it doesn't really matter if you like Trump or don't like him. We're just stating facts right now, ladies and gents, and this stuff is highly relevant as far as setups go in the market. And speaking of setups, if you're interested in getting exclusive chart setup updates from the team, we're actually posting those exclusively on Levex with this link in the description down below. It is an amazing exchange. It's exactly what you're used to. Many of the exchanges have great tech these days, and this is one of them, but they're giving you heavy bonuses when you start depositing, a free long short position as well, proof of one-to-one liquidity, proof of one-to-one reserves, and of course great liquidity as well. But like I said, the main benefit that I think is really cool is you get to see our updates from the team. So check out this link in the description if you're not from a restricted region. We've also got Bybit listed over here where you can actually trade traditional finance like stocks and forex and so on. Super cool. So check that out as well if you are interested. Again, just make sure that you're allowed to in your country. But what we have here now is a very nice kind of back test. And why am I talking to you about this back test? Put simply, the back test is important because this is something that we typically see during early stages of a bull market cycle. Okay, this is just something that you can go back and see throughout time. There are exceptions. You're never smart for pointing out exceptions. We've already covered that. But for the most part, a market will backtest its previous all-time high in a significant way at the beginning of the market cycle. Why is it at the beginning of the market cycle? Well, if we're going to see a nice big drawn-out bull market, let's say that the market ends up going somewhere here and maybe then it tops and gets a big drop. Well, we're pretty early on if we keep in mind that this bull market could last some time. And it really could. It's in line with the S&P 500's behavior and its characteristics over the decades. So this definitely lines up. Yes, it's overextended, and I think that's a really good point, and we can cover that a little bit later on. Make sure you smash up the likes if you're excited for that. But for the most part right here, ladies and gents, you're going to get these kind of back tests happening early stages of the bull market. And I think it's extremely clear that that's what happened here. Clearly, it is really not up for debate. The market is very hyped up by the idea of Trump being president. When Trump got elected for the third time as president of the United States, it actually triggered a huge rally. Where are we? 2024, November. It was right here. And it was what allowed Bitcoin to get this massive breakout over here. Of course, it's also where a lot of altcoins went really crazy as well. Maybe you made some money during that rally as well. Maybe you didn't and you were sidelined and you're trying to make sure that you don't repeat that again. I totally understand both perspectives there. But that's what we saw with Bitcoin when Trump was elected as president in November of 2024. Now, bringing it back to the S&P 500, if that's the case and the markets are happy with Trump being president, well, guess what, mate? We've got another 3.5 years of this going. So that could turn out to be very useful for the markets. It also lines up with the idea that this is happening during early stages of the markets as well. So I think this is absolutely fantastic because this literally only just happened. It's super local. It was only about 3.5 months ago. So that definitely implies, more than 6 months of continued upside at least from what I'm seeing here. But we've got a lot more. We're covering a few more factors throughout this video. And I think the next big one that I really want to draw your attention to is the interest rate situation. Now, in my home country, England, the Bank of England actually lowered interest rates again a couple of days ago from 4.25 to 4% as a base rate. And of course, the United States is doing similar things. They've already started. We've got charts that show us that pretty clearly. If we go ahead and look at the interest rates right here, the cuts have already started on this chart right here. Just ignore all these drawings. This was a roughly, kind of Q3, Q4 of 2024. The interest rate cuts have already started, and it's probably going to continue to come down. In fact, it seems like there's a lot of speculation of that happening next month of September. I don't know. I'm not hugely bothered about when that's going to happen, but we know that it has to come down. We know that things like the housing market in the United States have pretty much reached a standstill in many parts of the country. A lot of things that require capital have slowed down massively. and interest rates are going to be what kind of, just gets that going again. Again, as far as we know, Trump wants the economy doing well during his final term here. It's definitely something he is incentivized to push for, and he is pushing. There's a lot of that you can see in the news about how he's been, kind of dragging Jerome Powell for not lowering those interest rates and so on. So there's that factor, but there's also the fact here, and this is a really important fact, that the S&P 500 has been doing pretty well in this environment of rates being cut. Now, this is really interesting, right? Because if you look historically throughout periods where interest rates were cut massively, here's an example right here. Here's another example right here. Here's another example, which is present day today, right here. Now, if we focus on the two prior, this is the 2000 crash, so the dot-com bubble, and the 2007 housing crisis. So what happened when interest rates came down previously is they correlated. I'm not saying they caused, that is up for debate, but they correlated with big market crashes back in the 2000s. And of course the 2000s again. It happened twice during that decade. And there's more data supporting this, but the other data isn't as clear. Here's another example, but we're back in the 80s now where, interest rates started getting cut and it correlated with a drop. Now, the relationship between these, whether one is causing the other or whatever, honestly, I haven't seen good arguments on either side. Everybody's got a really confident opinion on this, and everybody's opinion is also different. I don't really care to comment about it. All I'm saying here is that transition periods for interest rates are usually pretty shit for markets. They are usually pretty shit for markets. But if we really take a close look at what happened during these periods, what we can see very clearly, ladies and gents, if I just reposition these charts a little bit, is that prices for the S&P 500 instantly started coming down during these situations we've marked on the chart where interest rates started to come down. As soon as interest rates started to come down, we instantly saw drops in the S&P 500. Now, contrast that to where we are right now, and we truly do have a different situation in this market. Interest rates started to come down toward the latter half of 2024, and we have done nothing but set brand new all-time highs. This is not something that usually happens. It also happened the last time rates were cut over here. We continued to go up straight away. We had a tiny pullback. It was, of course, the March coronavirus pullback of 2020. So it was a black swan anyway. What kind of black swan was it? Clearly not a particularly problematic one, but it was a black swan nonetheless. And the interest rate cuts still didn't result in a catastrophe for the markets. So this is a really good early warning sign where we are typically expecting pretty nasty price action to follow when interest rates start getting cut. That did not happen this time around, and it also didn't happen the last time when interest rates were obviously quite a bit lower than where they are right now, but they were still high compared to, effectively zero from earlier years. And so this is a really good sign that we're not necessarily out of the woods. We could definitely still conform to that pattern of speculative markets getting weaker when interest rates coming down. We could continue to replicate that pattern, but we haven't done it so far, and it's been quite some time, right? Since those rates were cut, we are looking, ladies and gents, at a market that's continued to rally for pretty much a year straight. So yeah, it's not perfect. Yeah, it's not been enough time to have complete confidence, but that's how it is being a trader, being an analyst, ladies and gents. That is how it is. You're not going to have perfect confidence. You're just going to have factors that keep weighing in one direction, and they keep leaning in that direction and moving further and making you feel more and more certain about your ideas. And at some point, you got to grab your balls, make sure they're still there, put some money behind an idea, and that's where you're playing calculated risks. That's where you're playing calculated probabilities. That's essentially all we're doing in the markets. If anything is ever certain, then it's already too late to trade it. And that's where you get to make the money, is kind of just playing those probabilities and seeing how things work. Again, some of these things that I say on this YouTube channel are going to sound disappointing, because shit, it is disappointing. At first you think it's a lottery ticket, and then it turns out it's actually not that easy. But of course, we are keeping things very grounded. It's absolutely essential that we do that. And if you're subscribed to the YouTube channel, you're going to be very intimately familiar with how that works over here. So I think that's actually really, really good as well. Now, in terms of Bitcoin, this is where I think things do get really interesting. And before we get to the really fun part and we look at the Bitcoin chart and where this thing could go, and trust me, I'm very excited for this, please bear in mind that we're about 14 minutes into this video and we haven't looked at a Bitcoin chart yet. This is not normal. A lot of people don't do this. And the reason they don't do this is because they do not have a thorough fundamental understanding of how the money in these markets work. You can't watch these videos without walking away with a thorough fundamental understanding of how money works in these markets. That's exactly what we plan to give you in these videos, and that's what we need to make sure that you have as you walk away from these videos. If it means you need to watch them twice, watch them twice. If it means you need to ask questions, ask your questions. If you feel like you want to do a little bit more hands-on work with us, we've got a phenomenal one-to-one program for you guys. It is an exclusive program. It lasts 12 weeks. Very serious. It's an expensive investment in yourself, but if that sounds like something that you think would be interesting for you, you can reach out with this link right here and a member of the team will get you that information. But let's bring it back to the charts here, and specifically Bitcoin. I want to start bringing this to the really fun part of the video. Thanks for being patient with me up until this point. There's no other way I could have done this. This is the most important way that we can convey this information. And let's just break down what this market cycle has looked like so far. There's a lot that we're going to do from this perspective, but let's just start by looking at this market cycle so far. And really, this market cycle has been a straight move up. And I think that's one of the big criticisms that people have, right? When they talk about how the market cycle might be ending soon, they're talking about things like the fact that Bitcoin has been trending up effectively for 1,000 days. Not true. We'll get to that in just a second. But they're talking about how Bitcoin's been trending like this for a long time, and crucially, how actually previous market cycles didn't last much longer than this. The previous one over here lasted 600 days. The one before that, that started in 2015, lasted 850 days. And we can keep going further back. You're going to see the same thing continuing to take place here. This one lasted 150 days. This one lasted 500 days. It is definitely the longest bull market that Bitcoin's ever had. And it comes with a few caveats. The first key thing that we need to keep in mind, and we already pretty much all knew this, but it seems like we're forgetting about it now because, I don't know, I honestly think that people who have survived a couple of cycles are so fucking scarred emotionally, financially by these markets that at this point they just want to feel pain. I don't know if that's relatable to any of you. Maybe it is. Let me know. It's got to be somewhere there deep-seated in their psychology. And essentially, you know, one of the first things we've got to understand is that we knew the markets would slow down because Bitcoin is a maturing market, right? Bitcoin is no longer the market that gets pumped up by a couple of people putting 10% of their paycheck into Bitcoin and they're just chilling in their basement, and it's a grassroots, you know, kind of movement, protesting the government, protesting legacy banking. None of that shit. Bitcoin's completely dominated by the same people that have dominated the world for decades or even centuries prior. And it's just essentially become their dog. It's become their bitch. And they are treating Bitcoin the same way that they treat any other market. And there's a lot of proof of that. Back in 2018, Jamie Dimon, whoever he is from JP Morgan, was talking about Bitcoin, saying that they are going to get into these markets. They're going to tame these markets. They're going to make these markets behave like the way they want them to behave, right? And it wasn't received very well. A lot of people in crypto were like, you know, who the hell are you? You know, I mean, you know, like, you're not one of us, or you're trying to say you're going to dominate the market. But guess what, ladies and gents? He was 100% correct. That's the only thing that ended up happening when all these bigger institutional players got into the market, and it has had a significant effect on these markets up to and including the present day. Now, that's really, really important because as markets mature, as markets like Bitcoin here reach literally multiple $1 trillion in their market cap, this is something that we have to expect. We have to expect that the market movements will slow down. It makes complete sense. It takes more money to move the markets these days, And we've kind of outgrown being a grassroots activist kind of community at this stage. You know, people that are just normal people speculating on internet money. It's not that anymore. The same money that moves all the big stuff is the same money that moves Bitcoin now. So naturally, yeah, dude, it has slowed down, and we knew that was going to happen. We saw that coming. If you didn't see that coming, you just weren't paying attention. There's no other way around this. So I think that's a really important starting point for understanding Bitcoin doing this thing for 1,000 days here, because like I said, a lot of people are going to be saying that this thing's been going on for too long and we've never trended for this long. But we must also carry with us the understanding that we knew things would slow down, and clearly they have slowed down by quite a bit. Let me show you something here that's really interesting, building on the next point. Bitcoin has consistently managed to form parallel channels throughout this bull market. Some of them go sideways, some of them go downwards a little bit, and a lot of them end up having deviations. But this has been a key characteristic of the Bitcoin market cycle so far. I don't really know what the hell happened over here, but it was also some form of a consolidation continuation pattern. Now, what do I mean by continuation pattern? What I'm saying is that the market trends up, and then the market can do one of a few things. It can kind of slowly trend down. It can look something a little bit like this, or it can just kind of trade sideways, look up something a little bit like this, or in some cases, it can even kind of trade slowly higher. But in all cases, this is how it tends to end inside of a bull market, right? So it can go a little bit like this, you know, it can go sideways, you know, something a little bit like this. But all of the things that happen in the middle, whether you're going down, triangle, sideways, up, down, square, isosceles, whatever, like it's still a continuation pattern. And essentially all that means is that the trend is, in this case, up. Then the trend pauses. Maybe we fight the trend a little bit. Maybe we don't. Maybe we just go sideways. But eventually the trend ends up resuming and we continue going higher. That is a key characteristic of all markets. It's something that we see across the board throughout the centuries even, and it's definitely something we've consistently seen for Bitcoin. But what's really interesting about this is we've got three really big continuation patterns. The first big continuation pattern is right here, and it measures out to about 220 days, which is 7 months. The second big period of continuation pattern right here measures out to about 8 months, 240 days. The third one over here, which we just ended, also measures out to about 7.5 months, or maybe even 8 months actually. So very similar time frames here, ladies and gents, where the market has not been trending. The trending parts of the market are the things that look like this. Every time you're kind of actively moving up, every time you're actively breaking key levels, this is a trending market. In between, everything else that happens is noise. It's also where people like you and I might get swept out of the market if we're impatient or if we don't really know what we're doing. Again, these are things that you can really fix. And at this point, it really is time to fix it. We're more than halfway through 2025. A lot of the bull market has happened. I don't know how much of it. I don't think we're close to the end, but a lot of it has happened. And we are reaching right now the point where you can make the most reward, you can make the most profits in these markets. But if you're still stuck with beginner level mistakes, if you're still repeating mistakes that you were making months or years ago, you're doing yourself an injustice. It's a really bad place to be. It's a really painful place to be, and you do not want to stay there. There's a ton of free resources you can use online. You can look at previous videos on this YouTube channel, and like I said, you've also got access to that incredible exclusive program right here, where actually nobody that's ever joined this program has failed to pay off the investment for joining pretty quickly after joining. In other words, everybody that ever joined this program paid off their investment to join, usually within the first few weeks. Very, very impressive. Super, super cool. It's not going to stay that way forever, but we're selective with who we take on. I want to make sure that I'm taking on people who essentially are not going to mess up their opportunity here and are going to do something good with it. So definitely reach out if you think that you're interested in that. But I think this is really important because if we started to kind of add up how much time Bitcoin was not trending for, 7.5 months basically on average, if, what is 7.5 months? 7.5 times 30, that's going to be about 220. And, we've done that 3 times. So that literally means that out of 1,000 days of being in a bull market, it's been 1,000 days, we've literally spent roughly 660 days, or in other words, 66% of that time, not trending. 66% of that time, we were not moving up. We were just messing about, trading sideways. Retail was losing patience. Retail was dropping their bags, selling them to the more patient holders who are not going to sell until they reach satisfactory profit levels. 66% of this entire market cycle was not spent trending. This is really different to what we saw previously, right? If you measure this market cycle right here, pretty much all of the time was trending up. We had a little period here, it lasted 80 days. We had another period here, it lasted 70 days. We're up to 150. That's it. We had this little period here, you're up to about 220, let's say. Nothing. It was almost nothing, right? The vast majority of the time. Look at 2017, ladies and gents. 2017, there's nothing other than trending. The only exception was over here, and this lasted 200 days. After that, Bitcoin was pretty much moving up in a straight line. This is a very different bull market, ladies and gents. We've only had about 340 days of trending during this bull market, which is very different to the previous bull markets we've had before. And I think it definitely helps us make a case that we're not really near the end. We haven't even really seen the potential of this bull market. But we'll take this a step further. I'm not done yet, ladies and gents. I'm not done yet. Smash up the likes if you're getting hyped up with me here. What we've got to take a look at next is how the market has actually moved in terms of its patterns, in terms of its shapes. This market cycle pretty much did something like this. You go up, you go sideways. You go up, you go sideways a little bit less. You go up, now you go down a little bit, then you go up again, then you fuck around and do that weird thing that we did over here, and then you go up again. This is a very controlled bull market. This is a very predictable bull market. This is a bull market that you can really see, that you can analyze easily. This is a bull market that is clearly not irrational. It's having long, extended periods of consolidation, which really helps it reset and then continue its blast off higher. And that, everything I've just said, is not representative of late-stage bull markets. It's not representative of late-stage bull markets. At the end of a bull market, your chart doesn't look like this. Your chart doesn't look like stable, predictable, controlled moves upward, punctuated by moving sideways a little bit, punctuated by slow, controlled downtrends. I know a lot of you guys lost your mind during periods like this, but again, you probably just weren't watching this channel because we knew exactly what was up during the whole time, right? If you've got a realistic head about these markets, then you're not scared when the markets trend down. You're not even scared if the markets drop by 30, 40%, because these things are normal for Bitcoin during bull markets. But I tell you what's not normal. What's not normal is having controlled, boring ascensions during a bull market. Retail hasn't made money here, ladies and gents. At least in a bull market, retail will make money. They won't usually hold on to the money. A lot of retail will make money and then actually end up in a loss compared to where they started. But this time, in this market cycle, unless you were in like 5 different altcoins, you probably haven't made money because most people aren't even holding Bitcoin anymore. So the only real winners are the institutions, the same people that launched their ETFs, the same people that launched World Liberty Fi, the same people that are part of the Trump family or the Trump organization that are very bullish on crypto, that have just started to get in. Those are the people that have been making profits throughout this market cycle. It has not been retail. And if retail hasn't had a chance to get their sunshine yet, I don't really see how the market cycle can end. I don't see it. I think, as it's always been, that you're going to get a massive rush of retail, be it your barbers, your taxi drivers, whoever else in your life, you know, that you see on a day-to-day basis starts shilling you XRP or whatever else the case is. We haven't seen too much of that yet throughout this market cycle, ladies and gents. It just hasn't happened yet. And I think that's really important to keep in mind, because if that hasn't happened yet, it probably means it has to happen at some stage. Coming back to the parabolic note, look at what the market cycle looked like last time. From September 2020 to April 2021, this was an incredible rally. It took 7 months, which is the same as any of our consolidation periods here pretty much in terms of time. It took 7 months, and the price managed to pull off a 570% move. In other words, that is a 6.7 times gain. 6.7. Absolutely incredible gain. for the market in a very short space of time. And clearly we've gone parabolic. What does parabolic mean? It means printing a parabola on the chart. In other words, you almost print a kind of hockey stick pattern. The hockey stick pattern is, and it's got to be a lot more, extreme than that. A hockey stick pattern is what tells you that you've gone parabolic. It's what tells you that things are crazy. It's what tells you that you're kind of entering a late stage of the bull market now, because you don't really have any sellers anymore, and you have a few buyers that push the market up very aggressively. Obviously, this completely flips on its head when sellers re-enter the market, because you never really had that much buying pressure to begin with, but now you have a lot of latent holders who are ready to start selling their holdings, and that's how you get these really big drops coming in very quickly. It's only because there wasn't a substantial amount of buying pressure to support it. The only reason the price went up in the first place is because there were no sellers. But if we consider that we've not seen a parabolic trend yet, this gets really interesting. Like this is actually the most bullish part of the video. This is where I know many of you guys are going to start bringing that lotion out. And essentially what we've got here now in this market is a situation where we haven't printed any kind of parabolic trend yet. And if we do, we're probably only going to print that parabolic trend from our all-time high and onwards, right? If we take a look, let me show you something huge here. I might have to make a dedicated video on this, but since you've made it this far into the video, I'm going to give you something absolutely amazing. Let's say that the bull market for Bitcoin in 2015, 2017, whatever, started around August of 2015. Now, where things really started to get crazy, if we look at it on this chart, it's probably like somewhere around here, right? Like this is probably where you could say things really got crazy. We're on the linear chart right now. But even on the logarithmic chart, you can see that it really started to get more aggressive. We can kind of draw lines that, broadly draw out the trend. And you can see how this next line is clearly quite a bit more aggressive than our previous gradient of attack, right? It doesn't look like a massive amount, but it is. And if you lived through it, you would understand that. Now, what's really important about all of this, in my opinion, is understanding where things started going crazy, understanding where things started to go parabolic. Now, if we measure this entire market cycle here, we started this uptrend in August of 2015. The entire market cycle lasted 847 days. And the crazy part, where you managed to get a 4 times gain, plus 300% gain, which equals 4 times gain, that all happens in the last 65 days. In other words, it takes like over 2 years to get here, and then it takes 2 months for it to finish. And those last 2 months are insane. You want to be in for these 2 months, arguably more than you want to be in for the period before, because now the trend is also validated and very exciting. Previously, you were speculating. Here, there's a lot less speculation. You're just buying what the next dickhead is probably going to buy and hoping that they have a worse purchase price than you so that you can dump on them. That's obviously how these markets go. And I think this is really important because so much of the gains happen in the last 65 days here. That kind of parabolic movement has not happened yet. Yeah, and this actually lines up with people saying that we could top out this year, because they're essentially saying that, we will get that parabola later on. But, here's the math behind it. When we entered this parabolic trend, I don't want to go too far into this because, it's something that many of you guys probably weren't even here for, but we started this parabolic trend after topping out at 5K. We reclaimed the 5K level, and that's where it went crazy. That's where we saw a 300% or 4x gain. And if we're going to get, even a 2x gain from here again, and let's say the parabolic trend starts right now, that is going to mean that we're potentially looking plus 100% from here. That's going to put us at about $240,000 as a first target if we end up going parabolic. And that's only if we go parabolic from our all-time high. We might start that parabolic trend, let's say, doing something like this over here when we reclaim this level, and that's going to be at 150K in that case, which actually puts our targets closer to 300. So it gets really crazy really quickly, and it starts printing ridiculous price targets. And this is not even assuming a 4x like what we got last time. Last time it was a 4 times gain. I'm just talking about a 2 times gain. It could be more, it could be less. One thing I really want to focus your attention on if all of this happens, especially interest rates, because that's a really long-term change for these markets, is that we're probably going to continue to see really long shit consolidation like what we had a couple of times throughout this market cycle already. I don't think that that's going to stop. I think that this is now normal for Bitcoin. I'm not worried about it because we've also got Bitcoin dominance to look at, which I just made a video on yesterday. So check out the YouTube channel if you missed that one. And that video is about alt season. We're going to be making a few more about those as well. For those of you that are subscribed, you can look forward to that. And what we're seeing with Bitcoin dominance is whenever the market does start kind of stabilizing, we start opening up opportunities to trade altcoins, whether that means buying or selling. There are opportunities there. And I think that means that even if Bitcoin gets boring, we have other coins, which, by the way, you know, Ethereum at $500 billion market cap is effectively the same. Let me do the quick math. It's effectively the same as Bitcoin at, I don't know, like a 25K market cap. I might be completely wrong about that, but the point is we've seen Bitcoin at much lower price levels and its market cap was equivalent to these kind of numbers before, and now our altcoins are sitting at these kind of valuations, which is really quite a big deal because that means those altcoins are very tradable and they have very real patterns that we can try and game and make some money off in these markets. So really, really exciting stuff, even if Bitcoin does get boring from here. But if that parabolic trend does come back, which, you know, it doesn't have to. We don't have to go parabolic during this market cycle. But if it does, it usually does happen, then we are potentially looking at quite an incredible continuation from here. Now, we covered a lot of ground in this video. There's more I can say, but it's getting super long. What I want to end this on is a super clear note about how this could all be completely wrong. There's a lot of things that could go wrong to invalidate my analysis. For example, a black swan event, be it a World War III type event or something else. There's a lot of things that could go wrong and make this not happen. But the bottom line is that Bitcoin has clearly chosen long-term, drawn-out consolidation periods throughout its bull market cycle as its correction of choice. Every time you trend, you need to correct. You need corrections. In this case, our corrections have been long sideways trading ranges. And if that continues to happen, this bull market can easily, if we start that right now, this bull market can easily spill over into Q2, quarter 2 of 2026, which, by the way, is getting very close to America's 250th anniversary of its existence, to America's 250th birthday, which obviously under Trump is probably going to be a pretty big deal as well. So I really think there's a lot at play here on this chart. And I don't see, like, honestly, I think the biggest thing that could be a problem is a transition period with interest rates. And we've already started to prove that that's not a problem for Bitcoin in 2025. So I don't know. I think we're looking pretty good. S&P 500 backtesting its previous all-time high. That's usually something that happens at the beginning of a bull market, not in the middle, not at the end. So I think that these are still really quite exciting factors that we have at play that we could be focusing on right now in this market. Now, look, this picture is going to continue to develop and I'm going to continue to give my updates on them. If the data changes and the data starts invalidating what I'm saying, I will change my bias. I have no problem doing that. That's how I've been able to survive in these markets for over 8 years. That's how I've been able to do well in these markets for over 8 years. I didn't get here by being stubborn. I didn't get here by marrying a coin and then being blind to the reality around that coin. That's not how I managed to get here. I got here by being grounded. I got here by being open to the data. And I got here by looking at things from a very factual perspective, not from an opinionated perspective, from a factual perspective. And that's exactly what we aim to deliver on this YouTube channel. If you've enjoyed this video, you know exactly what to do. Smash up those likes, subscribe, tick the bell, do all that good stuff. Check out the beautiful links in the description to phenomenal exchanges that you can get started trading on with huge bonuses deposited straight into your account after you start trading on all of them. Always check out the description. Just to make sure that you're not from any restricted regions or anything, you need to make sure that you're not breaking your country's local laws and regulations. And if you want to get inside our free Telegram group, that's going to be linked right here. If you want to get access to our one-to-one intense 12-week program, then you can follow these the lines in the description as well. And like I said, a member of the team will get back to you. Really hope you've enjoyed this one. You know what to do if you have, and we will see you all in the next one. Cheers.